the economy is going to collapse or fall into recession. So the markets are completely ignoring what is likely to happen. And while they still are looking in the rearview mirror at a playbook that is basically obsolete, they're not doing what they should be doing. They should be buying gold when they sell treasury. They should be selling dollars when they sell treasuries. After all, what the hell is a treasury but dollars? In fact, they're worse than dollars because they're not dollars today, they're dollars in the future. They're IOUs, they're commitments of the U.S. government to give you dollars in the distant future. Well, who knows what those things are going to be worth in the distant future. I think that you're going to see a break from gold and bonds. Now, part of that is the dollar. I said that bond yields rose for 5 weeks in a row. Well, the dollar rose for 5 weeks in a row as well. The dollar is going up with bond yields, but that's not what should be happening. And eventually this is going to decouple. I think that you're going to see the dollar and bonds falling together because the real reason that bonds are weak is because inflation is strong and going to get stronger. See, right now, people still look at the inflation data and the fact that it's stubbornly high, and the Fed is now concerned that it might re-rear its head as if its head ever disappeared. But, they were talking about inflation coming down. It went down from 9 to 3, but now it looks like it's going back up. And so the markets are looking at the resurgence in inflation, and their conclusion is, okay, the Fed's just going to have to fight a little harder to win this battle. It's going to have to raise rates a little more and keep them higher for longer. And that mentality has been propping up the dollar and suppressing gold. Now, the dollar hasn't made a new high. Gold hasn't made a new low, but it has keeping a bid in the dollar, and it's keeping pressure on gold. But eventually, as I've been saying, investors are going to have to realize that inflation sticking around longer than people thought. The fact that they can't slay this beast, this is not an indication that the Fed just has to fight harder to win. No, what we're seeing is proof that the Fed has already lost. Inflation won. The Fed can't possibly raise rates high enough to reduce inflation without crippling the economy, without creating a worse financial crisis than 2008. This fantasy, though, is still out there in the market. But at some point, the investors are going to be confronted with reality. And that reality is those days of really low inflation, they're gone. We're not going back to 2%, not even close. We're going to be much higher. And that's why you're going to see a much bigger backup. What if the Fed can't lower interest rates, even if it wants to, because inflation doesn't go down? And in fact, it may start cutting rates and have to abort it because inflation takes off. Because the minute they start cutting rates, the dollar falls through the floor, because I think it's getting ready to do that. I don't think there's any real support anymore other than the talk about higher rates and the belief that the inflation genie is going back in that bottle. But when the reality sets in that that's not going to happen, that we're going to have historically high levels of inflation, the yield curve is going to normalize. In fact, it's going to be steeper than normal because inflation is going to be accelerating even faster than normal. So when we go back to those days, then if you have a 5.4% yield on a 90-day bill, then you're going to have 6%, 7% or more. And we may not stop in the fives. The Fed may have to keep hiking short-term rates. There's a lot of risk for rates going much higher than people think. The economy is going to collapse or fall into recession. That's what all the bond bulls are betting on. They're betting that when the higher rates finally take their toll and create a recession, that the Fed is going to do what it's always done and cut rates. But what if inflation is not low? In fact, what if inflation is higher by the time we officially enter recession? In fact, what if it's higher inflation that is the catalyst to cause that recession? The Fed can't go and cut rates if inflation is the problem. because cutting rates will make that problem worse, which will actually sedate the economy that the Fed is trying to stimulate. In other words, it's checkmate for the Fed, right? The game is over. It can't do this anymore. The only way it got away with this stimulus in the past was because it was able to pretend that we didn't have enough inflation and that it needed to get the rate up to 2%, its made up target, right? Well, if it's already way above 2%, they can't play that game anymore, right? They can't, get away with that BS because no one's going to buy it. And so the bond market is going to get killed, and that's going to be a big problem for the stock market, because one of the reasons that the stock market gets saved, right, whenever the stock market goes down because of problems in the economy, problems for earnings, well, the Fed rescues the stock market by cutting interest rates, which now pushes up stock valuations and, of course, drives more people into the stock market because they can't get any yield in the bond market. Well, that's going to blow up too into the future. So when people really start to put the pieces together, the bottom's going to fall out of the dollar. That's going to be even worse for the bond market. And it's going to, explode the price of gold. So in the meantime, you've got this opportunity, as I've been, pounding the table on, to buy more gold and silver while you can, while the prices are still low. In my opinion, they're very low.